And Argentine President Javier Milei is pushing a new wave of economic reforms as he looks to lock in fiscal discipline and prevent a return to the policies that plunged the country into years of economic turmoil. Milei has announced plans to overhaul Argentina's central bank, barring it from financial government spending, while also proposing an unusual law that could trigger a government shutdown if fiscal deficits persist. The move comes as Argentina continues its long battle against chronic inflation, debt crises and repeated currency collapses. Argentina's central bank has long been at the heart of the country's economic crisis. For decades, successive governments have relied on the bank to print money and finance public spending, a practice that many economists blame for recurring currency devaluations, runaway inflation and repeated debt crises. Now, President Milei wants to end that practice. Under his proposed legislation, the central bank would be prohibited from financing the national, provincial and could also be municipal governments, and barred from buying newly issued government bonds in the primary market. Milei says the bank's primary role must once again be to preserve the value of Argentina's currency, while its governor and board would also receive greater protection from political interference. The announcement builds on Milei's broader economic agenda, which has focused on sharp spending cuts, deregulations and strict fiscal discipline since he took office in December 2023. The policies have come at a cost, sparking regular street protests and painful austerity, but they have also helped bring down annual inflation from triple digit levels to 33.5%. However, the economic recovery remains fragile. Argentina's economy expanded just 0.2% year-on-year, well below the International Monetary Fund's 3.5% growth forecast for 2026. Milei also unveiled a second bill which would automatically trigger a government shutdown if the country remains in fiscal deficit for several consecutive months and Congress fails to restore balance. Now, under the plan, non-essential government activities would be suspended, new spending and contracts would be frozen, and lawmakers along with senior government officials would stop receiving their salaries. The announcement comes just days after IMF Managing Director Kristalina Georgieva praised Argentina's improved economic position, crediting both the government's reforms and the sacrifices made by the Argentine people. Economists say that the central bank reforms are also aimed at reducing market volatility, particularly as Argentina heads towards its next presidential election in 2027.